Alrighty, what's going on, guys? Edward here, back with another video. Thank you so much for being here again. If you're new on the channel, make sure to give it a like, subscribe, for more content coming in. This particular video, I'm going to be talking about this is an ICT strategy. Um, it's a setup that is not going to be presented every single day. You can look for these setups um, pretty much everywhere or anywhere. You can go on cryptos, you can go on indices, you can go on currency pairs. However, the examples I'm going to be showing you right now are only going to be in currency pairs. If you want to do this in on Nasdaq right now, scalping, okay, this is for scalping for scalpers. So if you want to do it on Nasdaq or S&P, you have to understand that lately indices they have been very volatile, and as soon as New York session opens, it gets very choppy. So you can try, and if the opportunity is presented, you can take the shot. Okay, because that's what it's about. The opportunity has to be presented in front of your eyes. You need to see what you need to see when it comes to this particular strategy. Okay, all the criteria has to be met before you take the shot. Okay, if you don't have all your criteria on point, then you simply don't take the shot. Okay, the setup is not going to be presented every single day. So anyways, um, we're going to be using an indicator. If you want to use it, you could just remember the time, right? Literally, you don't need it. However, you do need to remember the time. So if you know what time this happens, cool. We're going to be using an indicator. I'll show you what it is, but it's basically trading during New York. If you trade London session, you can also do this. I'll explain you in a little bit. You want to trade the range, from Asian session, and all right. So this is what we're going to do. This is London. This is assuming that this is actually London session here. Let me change the name. So this is going to be London. Gonna put it on top. And this is Asian session, right? Just assuming that, right? So by the time New York session opens, what you want to see is the New York session. You want to see a manipulation of London high and a change in the state of delivery. Okay, what you're going to do, what you're going to get prepared once New York session is opening. If you notice, once the New York session, let's say it's opening right about here, what you can do is set an alert above the high of the London, right? The London high and London low. Okay, you set an alert. Whichever those two sweeps first, if the setup is presented later, you take the shot. What is the setup? What are we going to be looking? Just that shift in the structure, right? Once the price manipulates, you want to see that change in the state of delivery, right? You want to see this in lower time frame, right? And here you go lower time frame. Let's say you spotted this on a 15-minute or whatever. Let's say you're watching on the 5-minute. It doesn't matter. You mark up the London high and the London low. So New York session is about to open. If you noted the price swept and now all of a sudden retraces back down very quick, like that, very strong, you do have a change in the state of delivery. So you wait for the pullback. There are a couple of ways that you can enter. I'll explain. There's the aggressive way, the conservative way. So you can take the shot and go selling, trying to target the opposite, right? So London low. In this case, we just swept London high. We want to target London low or even the Asian low. Sometimes, you can get a very big risk to reward ratio right there. So again, if the opportunity is presented, if it's not presented, like what do I mean by that? Well, sometimes it's going to happen that the price will just do that and then just simply continue pushing up during New York session. So we're trying to catch the reversal. As soon as the price manipulates the London high, if we do get a setup to sell, we sell. If we don't get a setup to do anything here, we don't do anything, right? This is to catch the reversal because we want to go to the London low. We want to target the opposite, okay? So this is pretty much a reversal, kind of like a reversal strategy. I'll show you now once I jump on the chart, but this is basically it, okay? If you don't have a change in the state of delivery, then it means that you won't be selling. Now you might be wondering, but hey, isn't the trend bullish? Why should I be selling? Well, we're selling if the opportunity is presented, okay? Also, we're gonna be using right there the midnight open. Sometimes midnight open is gonna be like somewhere, let's say somewhere there, and we can use the midnight open as like to have our bias, to set our bias for the day. Like, if we are trading New York session opening right here and we are above the midnight open, we could assume that a market could sell. So it means that we should be looking for sales. But again, this is a theory. This is something that it will depend. It doesn't happen all the time. So opportunity has to be presented. Let's jump into the chart. All right, so here we are on Euro USD. Okay, notice this gray zone. I have it set at the moment. I have it set. I think this is from. Yeah, well, basically this is New York. But anyways, let me change it. I have it set from 8 a.m. to midday. Is it midday? Yeah, midday. All right. That's the session. I only trade New York session. I don't trade London. All right. I trade New York session. So notice what happened here. I'm just going to go here on New York when the session is starting. All right. I want you to see this. This is the indicator here. It's called ICT kill zones and pivots. ICT kill zones and pivots. Right. This is the creator right there. The settings. Gonna open it up. Probably you're probably gonna have other colors in there. These are the current settings that I have. Just Asia, London. Just make sure if you want to have it the same as I do on this video, just make sure to have the same settings. So you can pause the video, take a screenshot. But this is how I have it. If you have it different, just make sure maybe to set it the same way I have it. So I'm scrolling down so you can see all the settings again. You can pause everything. Style, yeah, pretty much everything is set. So anyways, what you're gonna get here is you see the London, right? Notice how volatile the London session was. Asian session, this is the kill zone. It's not the entire Asian session, it's just the kill zone for ICT. So there are certain hours that markets are more volatile, okay, during this specific hours. Pretty much in London is from 2 a.m. in the morning to around 5 a.m. Is a very, very volatile. So what you're going to do here, New York session is opening. What I'm telling you to do here is if you want to check a couple of pairs, right? At the same time, you're checking, let's say 2 to 3 pairs, and you're seeing now Euro USD and where we are right now. What you're going to do is set an alert here and set an alert here and go watch another pair, right? What you're waiting for here is whatever is it either the high or the low, right? We're going to be trading that range. So if this gets swept first, then we try to look for a sell if the setup is presented. If we do sweep this low, we are going to try to then go long. We're going to try to buy, but if the setup is presented, right? So let's see what happens right here during New York session within my hours, right? I'm not trading the entire New York session. I'm scalping right now. I'm on the 5-minute time frame, and I'm going to be trading from 8 a.m. Let's say I only want to watch the charts from 8 a.m. to midday, right? Just a few hours, right? I don't need the entire session, right? So let's wait right here. Let's see if we do sweep. All right, price has now taken this low. We have sell side liquidity. Now, do I want to buy right now? No, well, not yet, right? I'm not interested in buying yet. We had one of the criteria, which is price is sweeping now that sell. So let's see if we do get a setup, right? The entire criteria, so we can go long and probably try to target this high, right? Notice that we keep being kind of rangy. London session was very volatile right here. Now New York session is opening and is sweeping London low. So remember the criteria, right? In this point, I want to see, based on ICT, this is a change. This is what is known as a change in the state of delivery. Market structure shift would be at the top. This is market structure shift here. And something you can do if you're very aggressive, there's a technique right here. Where is the last bearish fair value gap that was formed? Right here. This is the last one. There are two, right? This is another fair value gap right here. But this is the last one that was formed after the break, right? This is the last one. So I'm going to mark up that one. This is a technique that you can do. I'm going to see, I want to see if the next candle will break or close above 50% of this fair value gap. If it closes above the 50%, I can take that as a shot. I can take that as an opportunity. But that's a very aggressive. So I'm showing you the aggressive type of entry. What's the aggressive? Aggressive type of entry? Well, let's see what it does here. Notice the volume right here. See, price manipulated the lows, and now we're coming back into the range, right? Into this. Let's look at it this way. This is a support right here, right? Price swept, immediately came back up. We are on top of the support again, right? With volume. It's not a weak. We're having a lot of volume right there. So that's a strong sign, right? Now, we have also broken that fair value gap completely. So if you're aggressive, you can actually take a buy right away and place the stop loss below this low and target this high. If you're aggressive, if you're a bit more conservative, you wait for the change in the state. You wait a little bit more. Let's wait a little bit more. Let's say we don't want to enter right away. That's too aggressive. Let's see what happens next. Notice that the next few candles, we're actually respecting this. This is turning into what is known as an inversion fair value gap. So that seems to be holding. Let's see if we do hold. Boom. What do we got there? We have a break of this high. Candle closing right there. Now the next type of trader will come in. If you are maybe not so aggressive, you can take a buy right there if you want. You can place the stop loss here, targeting this high, right? This is still probably aggressive. Let's say this is a not so aggressive way. This is the not so aggressive part right there. Right? This is the aggressive, not so aggressive. What is the conservative way? The conservative is that now after we close above is I'm going to place a buy. Like the conservative way is I want price to tap my zone. If it doesn't tap my zone, then I don't care. I don't enter. So I'm going to place a buy limit right at the line of the changing state. So I need the price to pull back and tap it, right? That's the conservative. That's the conservative. Jesus, conservative does it spell? Oh, correct me if I'm wrong. Sorry for my English. I don't know if I think it's with S or with C. Anyways, let me know if that's wrong. Conservative, I think it's with S. All right. So let's see what happens right there. Next candle. Notice the next candle activated, right? It did pull back, tap the entry, and activated my position. So from there, pretty much price moved up to the upside. So you see, all criteria was met. Okay, everything was met. All criteria was met, and this is what it's all about. You simply wait, okay, for your criteria for what you want to see if it's actually happening. If it's not happening, then why would you be looking for buys? Market after taking this low, price could simply continue, right? It could just, okay, it broke right there. It could pull back and then just maybe continue going, right? Not necessarily means that it's going to reverse just because it took a low, right? Not necessarily. But if the criteria is met, then you can take the shot, okay? So this is what it's all about. Let's go to a different day, for example, right here. The thing is that in this particular day, I think something happened. Probably we had news or something. This was a big spike right there. I don't mess with news. I don't like news. Be careful. I don't like them. But anyways, notice the London session here. It was already dropping. The New York session open right here. And then from there, just skyrocket. Notice that big push, right? It didn't even, I mean, it did drop later. Like if you look at it in theory, it actually did sweep and then reverse later. But I mean, this is that push right there. No, I would not be messing with that. I would not. So I'll be very cautious. Let's see this day. Let's actually see that day right there. I'm gonna go here. I'm gonna give you a couple of example, and I'm probably gonna jump into another pair as well later on. But let's see. So New York session is about to open. It's open now. But notice, right? This is what the day is showing me. New York session open right here. If you look at it, this is actually London. This is still London session, of course, right? We are sweeping London. The kill zone was right here. And this is the high of the kill zone. And probably this is this is the Asian highs, right? Well, what's happening right now is that we're pretty low. The prices seems to be continuing dropping and it keeps creating lows. Now, New York session has created a new low. Let's see what it's going to do there. If it's going to reverse. Sometimes, again, if the opportunity is not presented, why would you be trading? Why would you be taking the shot? You know. So, did the opportunity was the opportunity presented here? Probably not. Not the same as the first example that I sent you, right? Let's see. I'm going to look for a similar example. So I want you to focus on the setups and the examples that you want to take. Examples like this, or setups like this, or days like this. You believe me, you don't want to be looking at this pair. You want to look at another pair. Let me hop into another, probably a good setup here. Look at this one right here. This day we have New York session now opening, right? Notice again the kill zone was right here. This is still a London high. This is London high, and this is the low of London. So we're like into the range. We're back inside this range. So let's see what price can do. This high is still London, okay? So I mean, we could probably get also an opportunity if price does come back here, sweeps and then reverses quick, and we get a setup presented. We could go short, right? And vice versa if it happens to the downside. But let's see what happened right here. So New York session is currently running. All right, this is a big drop right there. We're taking the lows, right? Price continues dropping. It's building. This is the last fair value gap. Let's see what's going to happen next. Wow. Well, price still killing it. Like it's still dying right here, still dropping. Let's see if we do all of a sudden get a reversal or a break. Where was the last fair value gap? This is the last bearish fair value gap. If I want to even try a buy, I need to wait for a closure. So notice this closure entirely. Look at the size of this candle. Again, let's just assume that this is a support right here. Notice price is trying to come back up, right? Very strong. So with this, if I am very, again, aggressive, I can take a buy right there already because we already broke this. This is turning, this bearish fair value gap is turning into an inversion fair value gap. So if I'm very aggressive, I can take the buy right there, right away. Or I can wait, maybe I can place a buy limit order right here and wait for the retest of this fair value gap if I want, right? Sometimes if you place a buy limit, sometimes the price will never tap your zone and it will just go away, right? It will just escape without you. So that's the thing when it comes to aggressive traders and conservative traders. Sometimes you're gonna miss positions. So let's see what is happening at this point. We did form an actual bullish fair value gap right here, so we could have taken. Do we have a change in the state of delivery? Wow, it's quite far away. The change in the state after this big drop, probably the change in the state of delivery would have been here. very far away. So price skyrocket after that. But you see, this is a day where, I don't know, we probably had some news in here, but that was very, very volatile right there. But notice again, we swept London lows and an aggressive opportunity was presented and you could have taken, right? But that's a very aggressive opportunity. I'm going to continue looking for more examples, probably more conservative examples. So let's see. All right, so this is probably my favorite type of scenario. I think that's the word, is when the London killer zone, right, and the New York session opens, we're still inside the London zone, the killer zone, right? There's some other days where by the time New York session opens, you see we already kind of broke, we are below the killer zone. But notice that right here, by the time the New York session opens, we're still within the range. We have not gotten out of the range. So this is my favorite ones. So if you want to look only for opportunities like this, let's say, you only want to look for, let's say, you're gonna watch all of these pairs, right? At exactly 8 a.m. in the morning. Take a couple seconds. Start from the top. Boom. You take a look at this pair. Are we in the range of the killer London session? No. Okay, look into the next pair. Boom, 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 boom. You can do the same, okay, like that, with every single pair. And those who are inside, those are probably the pairs you want to be looking to trade in that specific day. Again, the opportunity is not going to be presented every single day for every single pair. You may not even have one at all. So it's like that. You may not even be trading, right? Some days, right? So don't if you are disciplined and you say, hey, I don't care whatever happens, I want to only be looking for opportunities like this, then only look for opportunities like this. So let's say what happens here. New York session just opened, right? And we're starting to see that now we're manipulating that high. We have buy side liquidity being taken. So what do I want to see if I want to sell? Remember, we're scalping, okay? All the examples I'm showing you are on the 5-minute time frame. It's my favorite time frame. I have students that they like the 1 minute, they like the 2 minute, they like the 3 minute, they like the 15. So again, my personal, right, is the 5. I like the 5. The 1 minute, I'm not gonna lie. Yes, sometimes you can catch like beautiful sniper entries, beautiful risk to rewards, but it's for me, it's probably more choppy. There's more noise on the one. But that will depend, right? So again, this is up to you because I'm getting this question. Oh, what is the best time frame to do this type of stuff? I'm showing you every example on the 5-minute time frame. It's my favorite one, and it's a scalping. If you want to, because we are trading the range, the actual just that killer range. You cannot do this on swing. You cannot do this on a 4 hour on a daily, right? Because I hope it makes sense. We're just trading this range, and just between this range, just a small amount of pips, right? It's just a short move. It's a quick scalp. So, anyways, right here, if I want to sell, right, what do I want to see? What's my criteria? You already know what it is. I need to see a candle closing below. That's a change in the state of delivery. Or where was the last fair value gap? Right here. This is the last bullish fair value gap that we have, right? If remember the aggressive, the not so aggressive, and the conservative way. So you have to find out who you are, what type of trader you want to be. You want to be a conservative. Today you're feeling aggressive. Today you're feeling conservative. You want to, I don't want to be that aggressive. So let's see. Anyways, what happens there? Next candle. Okay, notice that the next candle actually we did build another fair value gap right there, right? That's the last one so far after the break. So we do have a fair value gap right there. So let's see if we do break it or push it up or push up. Right there, we did break below. What does that mean is that the aggressive trader, if he wants to jump in, he can take the shot already. But this is aggressive, very aggressive. The aggressive way can give you more risk to reward. But what is the bad thing? There's always a pro and a con. What's the bad thing about this? Is that we don't have a change in the state of delivery, like a change of character, whatever you want to call it, right? Whenever the price breaks this, it's more probabilities for the price. It's actually reversing. But this is a very early sign. It's a very early sign. So being very early means more risk to it. However, it compensates with the beautiful risk to reward, a 1 to 5 risk to reward right there, right? So let's say that the aggressive trader took the shot right there. Let's see what happens next. Boom, we're starting to see now momentum, right? Beautiful momentum right there. Now the conservative or the not so aggressive could enter right away as soon as that candle closes. So stop loss here, take profit here. What's the risk to reward for that? 122.37. Right? It's less, but you have more confirmation, right? That there's more chances now. Now the conservative will place a sell limit and will wait, right? The conservative will wait for price to tap your zone, right? So let's see what happens. Do we tap? It looks like we did tap it. Yep, that line tap this line right there. That candle, that wick right there. So it looks like we are in on all three positions. So all traders right there would have entered. Look at that. We actually did even have a deeper pullback right there into this bearish fair value gap. We respect it. Now from there we can move stops to break even, taking partials, right? Beautiful. Look at that, right? So now what happens? You might say, oh, well, that's all. I am out, Notice what just happened right here. Sell side. We just swept sell side now. This gets interesting. I mean, this is not going to happen probably every single day. It's not going to happen that often. But if it does, I mean, you can probably take a shot. Where was the last fair value gap? Right here. This is the last bearish fair value gap and got broken, right? Price swept, took liquidity, and now we have a big momentum candle closing above. So this is turning into an inversion fair value gap, right? So the aggressive trader would want to buy as soon as that candle closes. Stop loss here. And probably if you want to target it all the way back up, I mean, it's up to you, right? The conservative trader probably want to wait for the retest. There is no change in the state of delivery yet. I mean, this move was very, let's see, probably on the 1 minute. If we have something better to see. No, normally the 1 minute gets very choppy. But this is a sweep. This is the actual change in the state on the 1 minute. That's the change in the state of delivery right there. Let's see what we got actually on the 1 minute. Oh, beautiful. So it's tapping. This is gorgeous. Oh, even better. Look at this. Even better. Price has tapped the change in the state, right? This is the auto block right there. Tap change in the state of delivery. It didn't just tap it. Look at the beautiful rejections. So automatically right here, you have one more sweep, liquidity, and another change in the state of delivery. So you see, you have another setup or internal model into this big model on the 5 minute. So like literally, if you wanted to enter on a buy right there, you could do it, and you can place the stop loss here, right there, and you could be targeting again, maybe this highs. You see now on the 1 minute, well, I don't know if that's going to play out, but it's very tight. The stop loss is very tight. This is going to be a 1 to 8 risk to reward, right? That's the difference. When you enter on the one, it's a beautiful risk to reward right there. But I don't know if that's going to happen. I don't like it. I'm not a fan of this one because it's very, I don't know. Let's see. It did ended up. Oh, I'll be break even already. I'll be taking partials. Is it going to go all the way to the top? Boy, I don't know. Look at that. This doesn't happen, every day. But you see that you have beautiful opportunities. GBP, JPY, New York session was a killer right here. It was a beautiful. Swept London high, went down to take London low, and then the skyrocketed again. So it gave you sells and buys. Beautiful, beautiful. This is the type of, again, setup or scenario that I like the most. Let me see if I can get another scenario, like right quick, probably something. This is not my favorite one, you see, because by the time New Year's session opens, we are already going down. Yeah, we did shift to the upside, but it's not the criteria. It's not showing me the criteria I want, right? Let's see this day here. You see, so I'm showing you what are the days, the best days. Probably right here, I don't know. This one, notice that the criteria was not met. I mean, we broke below. This is still London. So let's see if we do sweep this and we show some intention of buying. You see, it's not telling me, it's not giving me any reversal. There's no force right here trying to come back into the range. So you see, the scenario or the criteria is not being presented in this scenario, in this opportunity. You know what I mean? Hope it makes sense. I'm trying to be clear here so that everybody can understand it. Let me pause and let me get another good example. Here we go. Another scenario where, there we go, New York session is opening. What did I tell you? So the scenario has been presented where New York session opens and the killer zone from London is still, we're still within the range of that killer zone. So that's beautiful. We are within that box. This makes it awesome right here. So now again, if you notice, this is why you have plenty of pairs. If you're checking all of a sudden, you're starting to check GBP, JPY this particular day right there, and it's 8 a.m. and you notice that, oh, we're still within the London killer zones range right there. Perfect. I'm going to set an alert here and set an alert here, and then I'm going to proceed and continue looking for other pairs. And I will do the same thing. I will try to see where we are, where the price is sitting currently, since New York session is just opening. I'm going to look all of these pairs and I want to see where we are sitting. If we are sitting right here in a similar scenario, then these are the pairs that I want to look at. This is probably my favorite ones again. So let's just wait, right? Set alerts and just wait. So here we go. We're trying to break to the upside, right? Let's see what opportunity was presented here. Price try to break right here. Last fair value gap is this one. So remember, if you're aggressive, maybe you want to try a sell. If we close below that, let's see what we have. Okay. Oh, well, notice the price actually pushed up again and swept one more time, but we reverse. We're trying to reverse. Do we sell here? No, right? Because that candle has not closed below 50%. So this fair value gap, bullish fair value gap, can still hold the price. It looks like it's still holding, but let's see. Wait for next candle. Aha. What is this candle telling me? Nothing. There is no entry yet, no nothing. So far, watch out because price could bounce from there and it could just simply push, right? We don't have nothing. You see? We're not getting anything yet. It looks like it doesn't want to reverse. Let's wait. So far, it looks like price is trying, or did it? I don't know if it sweep. It looks like it barely swept. Barely swept that high one more time. This is not looking that good. At this point, I'm not a fan of this, but however, if we do get a closer here, this is probably my change in the state of delivery. Let's see what happens. All right. Notice this type of crazy volatility right now. Would you enter there? No. Why? Why not? Well, because we have not closed below anything. We're still technically holding that bullish fair value gap. We did not close below this, the change in the state of delivery, right? Or the fair value gap. We're still right there fighting that rejection right there. So I need to see a closure. Next candle. Notice, right? It's fighting. I got nothing yet. I literally got nothing yet. I still would want to sell, but if we do close below, but we got nothing. Boom, we do close below now. So this is the part where the aggressive trader would try to come in here. Boom, entering here, stop loss here, and take profit. You see, if it looks too close right there, you can try maybe using the Fibonacci, going from the high to the low of this last manipulation move, and you use the standard deviation. Oh, but standard deviation is actually telling me right there. So okay, that's what I would do. The aggressive trader would enter right there, but that's a very, it sucks, right? But that's what it is. You're not going to get a beautiful risk to reward all the time. Okay, you have to get used to the fact that it's not going to happen all the time, right? Every opportunity could be different. So now the conservative trader, where would the conservative trader place? Well, probably the conservative trader will place the entry there, stop loss there, and take profit here. That's a conservative. It has a better risk to reward the conservative this time. But the only bad thing is that the conservative has to wait for price to come back up and tap it. And sometimes that's not going to happen. Sometimes the price will just melt and it's going to leave you behind. But that's the conservative way, right? This is why it's called conservative. You're a bit more patient and you wait for certain things, certain more criteria. So let's wait for the next candle. Let's see quickly. Do we get tapped? Holy, I think we did get tapped. Yep, price came back to the change in the state right there to that block. So we did get tapped. Beautiful displacement now to the downside. And did we drop? There we go. So again, understand what I'm trying to show you here. Okay, I showed you what's my favorite type of range or scenario. Okay, rewatch this video a couple of times. If you still didn't get it, just watch it from the beginning again until you get this. Okay, you can do this. Try to do this with every single pair. You can do this in Nasdaq or S&P, indices if you want, right? You can also do the same. It's the same. It gathers the same criteria. However, lately Nasdaq, especially scalping, it's been very, very volatile during these hours right here. So it gets more volatile. But if you do get the setup and every opportunity is presented, why not? You can take the shot, right? Just don't blow your account with one single trade, please. Don't do that stupidity. All right. Just make sure to protect your money. You never know where price is going to go. Price can go anywhere. You don't control that. Where are the things that you control? You control your stop loss. You control your lot size, right? How much you're risking. You control where to put the stop loss, where to put your take profits. You do control that. So focus on those things, right? That you can actually control. If you get stopped out, boy, you get stopped out. It is what it is. You're going to lose. But I don't want to hear from people. I blew my account with one trade. What are you doing? You gambling. So hope you guys understand. Hope you guys find this video helpful. And just let me know in the comment section, what do you think about this? Have you tried it? And if you did try, probably a couple, but after a few weeks, just let me know how it's going. And I think this is a very good, simple technique from ICT concepts. You can play around with this if you want to do the same thing, but during probably combining Asian session, London session, or just trading the London session instead of the New York. It's the same thing. It's the same thing, but now this time you're going to be looking to enter the range. You want to trade the range of Asia, right? So it's the same criteria. It's the same thing. So hope it makes sense. Let me know what you think. Please subscribe if you're new. Just make sure to follow me on my Telegram. I do post ideas on my free Telegram. Post ideas there pretty much every week. And if you want to be part of my private mentorship, I do teach ICT concepts, SNC concepts. I do have a program right now, which is a lifetime mentorship for a one-time payment. All right, just make sure to check out my website to find the information there. So thanks again, guys, for watching, and I will see you in the next one. Take it easy.